Okay, hi everyone, welcome to today's webinar. So, for today's session, we are going to be talking about whether mindset or technical skill is more important in the Forex markets. We'll give about 2 more minutes to let more people join the session before we get started. In the meantime, let me know in the chat if you guys can see me and hear me. And of course, if you guys have any questions throughout the webinar, feel free to let me know as well. Okay, we'll be back in about 2 more minutes. Thanks, everyone. Okay, I've just checked the chat and seems like everything is all good. So we'll just go ahead and get started. Okay. So as per usual, a disclaimer, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. A risk warning: trading Forex and CFDs carries a high level of risk to your capital, and you should only trade with money that you can afford to lose. Okay, I'm Melanie and I'll be covering for Peggy for today. I'm an investment analyst at Rocket, who finalist for Best FX and Equity Research in the years 2019 to 2021. So we specialize in technical analysis with a focus on Fibonacci retracements, extensions, and projections. Okay, so here's our agenda for today's webinar. We'll start by defining mindset and technical analysis. What's the difference between the two? Then we'll talk about the role of technical analysis in Forex, the power of mindset and trading psychology, and when mindset or technique made a difference, and lastly, integrating both for consistent success. Okay, so let's start off by defining these two pillars. Let me just check. Okay. Yep, so let's start by defining the two mindset and technical analysis. So firstly, let's start with mindset. So this is basically your psychological framework. So it includes your discipline, emotional control, patience, confidence, risk tolerance, and your resilience as well. So so it's your emotional approach that you take when making decisions. So key aspects: discipline refers to sticking to your trading plan even in volatile markets. Patience, waiting for the right setups rather than jumping into trades. And emotional control, managing fear, greed, and frustration. And lastly is your growth mindset, being open to learning from mistakes and continuously improving. Next is technical analysis. So technical analysis is basically the study of historical price data to forecast future price movements. So when we talk about this, we're talking about things like price action, chart patterns, indicators. We've listed a couple here: moving averages, RSI, MACD, Fibonacci, and so on. And it's about analyzing historical price movements to forecast your future market behavior through patterns. So, for example, recognizing formations like head and shoulders or double tops or bottoms. So, both of these aspects are critical, but they serve different purposes. So, one helps you to identify opportunities, and the other helps you to execute and manage your trades properly. Okay, now let's talk about the role of technical analysis in Forex. So, why is technical analysis important? So technical analysis basically provides the what and when aspect of trading. So it helps you to identify trends. Um, so basically helping you to spot the bullish, bearish, or sideways trends or direction. Next is your entry and exit points. So it helps you to set your stop loss or take profit levels. And next is risk management. So it allows you to set these levels that I mentioned based on price action and also understanding the market structure and the trends. Support and resistance, this is what we always talk about during our live analysis sessions, identifying key levels where price might reverse or continue. So for example, you might use support and resistance levels to determine your entry and exit points. Trend lines, which can help you to define your market direction, and indicators like RSI, MACD help to confirm your momentum or divergence. Okay, but here's the truth, even the most accurate technical setup means nothing if you don't have the discipline to follow it. So a couple limitations of technical analysis is that past performance doesn't always predict future results. And it doesn't account for news or economic changes, and it's quite subjective. Different traders may interpret the same chart differently. Okay, so let's talk about the power of mindset and trading psychology. So now let's shift the mindset a bit. So why do so many technically skilled traders still fail? So firstly is emotional control. So exiting too early due to your fear of loss or holding on too long hoping for more profits, these are aspects of emotional control that prevents you from making impulsive decisions that's driven by fear or greed. Next is revenge trading. This is also another aspect of emotional control, trying to make back your losses with poor judgment and then resulting in even greater losses. So discipline ensures that you follow your trading plan even during your losing streaks. Discipline also comes, I think, in the aspect of um, ensuring that you don't overtrade. So entering trades only when you have solid setups and not out of impatience. Next is resilience. So it helps you to recover from losses and stay focused on long-term goals. And lastly is adaptability. So this encourages learning from mistakes and adjusting strategies. Okay, so studies show that 80 to 90% of trading success comes down to psychology. So, a solid mindset helps you to stick to your plan, manage losses without panic, stay patient for high quality setups, and maintain consistency over time. Okay, so we can talk about a couple or two brief examples of when mindset or technique made the difference. So, firstly, is in the event that technique saved the day. First, Firstly, in this scenario, a trader spots a double bottom pattern and enters a long position, and this results in a profitable trade. So, the outcome of this is that the ability to read charts and indicators led to a successful outcome. So his technical knowledge allowed him to trust in this setup. Example two, where the mindset saves the day, is the scenario where a trader experiences a series of losses but avoids revenge trading by sticking to their plan. So the outcome is that emotional control and discipline prevent further losses and prevent capital for or preserve capital for future opportunities. So in both cases, one pillar reinforced the other. They're not mutually exclusive, but they more complement each other. Okay, any questions so far? Let me just check. Okay, all good. Seems like there are no questions yet. Okay, great. So let's move on. So what's the key takeaway here? Um, or how do you integrate both for consistent success? So both are essential because technical analysis gives you the plan, it provides the tools to analyze the market and make informed decisions. Next is your mindset allows you to execute the plan. So it ensures that you use those tools effectively regardless of the market conditions. So, how do you integrate both of these for consistent success? First is to develop a clear trading system. So you want to include both technical rules and psychological strategies. Um, Another way that you can do this is by backtesting your strategy to build confidence in it. So you are testing the technical aspect of it while still, which helps you to build your emotional and psychological confidence in your strategy. Next is continuous learning. So, by staying updated on technical developments and work on emotional intelligence as well as your discipline, that can help you to remain consistent. And thirdly, risk management. So, you want to always be able to control your downside. So, you do this by using stop loss and take profit orders to protect your capital. Next is to review and adapt. So something that you can also do here is to keep a trading journal. So you record not just your trades but also your emotions during when you are regularly reviewing your trades. So this mindset helps you to identify areas for improvement as well, both in the technical sense within your strategy and also in terms of your psychological aspect. Okay, and of course, you have to accept uncertainty where losses are part of the game, so you can focus on the process over the outcome. So consistency comes from mastering both the technical aspect as well as the psychological aspect. Okay, so in conclusion, technical skills and mindset are like two wings of a plane. Well, essentially, you need both to fly. But many traders will chase, the next indicator or your strategy, but neglect your mental game. And then most blown accounts are not from poor setups, but from poor execution due to your inability to control emotions. So technical skills essential for analyzing the market and making informed trades, but your mindset is critical for emotional control, discipline, and longer term success. Okay, Um, that's it for my slides. We still have a bunch of time left, so I'm going to pull out our charts and then we can take a look at a couple of setups together. Okay, let me just. Okay, we have a question. Yeah, if you guys have any questions, let me know in the chat. So, AJ asks how to develop mindset. So, that's a good question. I think this is exactly where most traders struggle. So we can talk about um I think firstly is developing self-awareness. So like I mentioned previously, starting a journal. So if you start journaling your traits, you can include features like obviously the date and time of your trades, what your positions are, all the technical aspects of that is still important. But you also want to talk about what were you feeling before, during, and after the trade. Talk about you can write down how did fear, greed, or revenge trading affect your decisions? Did it result in even greater losses? Being self-aware of what happens in the moment when you are trading, I think that is the first step. Um, yeah, and then secondly would of course be from your journal entries. You can then decide which aspects need improvements made, and then create a structured trading plan with clear entry exit rules. Of course, your defined position sizing, risk management, um, number of trades a day, per day or per week. Just write everything down. I think this helps to reduce impulsive behavior as well. So if you have a solid plan, you're less likely to act emotionally. And yeah, I think um going back on my point on accepting uncertainty as well, because losses are quite normal in trading. So avoiding attaching I guess self-worth to each trade outcome and focusing on the long-term consistency of it instead of just the short-term results. Mm, yeah, if you guys have any other thoughts or tips, you can type them out in the chat or in the comment section. I think there's like over time your confidence will grow as well as you see your patterns repeat. So you can also start if you're kind of a beginner, you can also start in a more simulated environment. So you can open a demo account. So that can also help to develop emotional control in a lower stakes environment. Okay, are there any other questions? Let me just pull up my charts while you guys let me know if there are any other questions. Okay, no questions. Great. Yeah, I'm trying to pull up my charts so that we can take a look at a few setups. Okay, let's maybe start by looking at this week's economic events. Like we mentioned in the presentation, one of the limitations of hmm, yeah, one of the limitations of technical analysis is that you're not really taking into account the fundamentals. So let's take a look at that now. Why is it not showing up? Hmm. Okay. Okay, this is really zoomed in. Let me just try and adjust it. Okay, fine. I think this is good enough. We'll just quickly cover this and then look at our charts. Okay, so I'm gonna take a look at this week's events. Okay, so starting off on Monday, yesterday we had China's industrial production and retail sales data. Can you guys see the results? Okay, so industrial production came out to be slightly lower than forecasted at 5.8%. Retail sales came out to be higher than forecasted at 6.4. And the US Empire State Manufacturing Index came out to be significantly lower than forecasted at minus 16.0. Today, Bank of Japan released their policy rate and they are maintaining it at 0.5%. Eurozone, German ZEW economic sentiment was released at 47.5. US core retail sales will be released tonight. And tomorrow, Wednesday, we have UK CPI data. So this is inflationary data, it's a high impact event. And we are expecting prices to drop slightly, not prices, but expecting it to drop slightly to 3.3%. US unemployment claims will be released tomorrow as well as BOC Gov Macklem speaking. And on Thursday, we have US federal funds rate expected to remain the same at 4.5%. We also have the FOMC economic projections and statement. And Kiwi, we have GDP quarter-on-quarter data expected to remain the same at 0.7%. Australia's unemployment rate expected to remain the same at 4.1%. Switzerland SNB monetary policy assessment will be on Thursday as well, and the policy rate is expected to drop to 0%. UK's monetary policy summary will also be on Thursday, and the official bank rate is expected to remain the same at 4.25%. Lastly, on Friday, we have the China's 1-year and 5-year loan prime rates, UK's retail sales, and Bank of Japan governor will be speaking. Canadian core retail sales and US Philly Fed manufacturing index will also be released. So this is forexfactory.com in case you guys are wondering what website we're looking at. But there are a lot of other economic calendars you can use for free as well. We just like this one because it also allows you to filter your options. So you can get rid of any currencies you're not currently looking at. Expected impact, you can see that I have the low impact, which is this yellow icon, removed. This just helps to streamline our search. So we're just looking at the medium impact to high impact events because these will have a greater impact on our charts as well. Okay, as well as any event types that you're not looking at. Okay, now let's take a look at our charts. I'll start off by looking at DXY. Okay. Not sure why it's not showing up. Okay, great. Okay, we'll start by looking at dxy. Okay, yep, I see a bunch of requests, so I'll go through as many as I can as well. So starting with dxy on our weekly time frame, we have prices generally falling quite recently. Daily time frame as well, although there's been a slight jump there on our 4-hour time frame as well. Okay, let's analyze this on our 4-hour time frame. So this will be my first support. This is my first resistance. Okay, maybe a second resistance here. Mm, okay, we don't have any other levels here. Okay, so I'll place my first support over here instead at the swing low. Okay, now I'm going in with a retracement. Okay, my 61.8 lines up nicely. I'll do another retracement just from here. Okay, another 61.8. Okay, I'm gonna keep this 61.8. Actually, let's check. Okay, I'll keep the 78 instead, since it lines up better with our first support. I'm also going to take this projection here. Okay, no. Okay, we might have a bit of a Nike tick here. Okay, my 161.8 lines up. Okay, now that I have all my levels, I'm gonna go in with our Fibonacci and Ichimoku. Sorry, with our indicators. I'm done with my Fibonacci levels. I'm gonna pull out my indicators. So starting with Ichimoku and MACD, because at one glance we can see exactly what the signals are telling us. You can see MACD has started to give us a bit of a rebound, whereas Ichimoku is still in that bearish, giving us a bearish signal. Okay, now let's look at maybe Bollinger Bands. Bollinger Bands aren't telling us much. Okay, let's look at our moving averages. Okay, prices have recently crossed above both of our moving averages. I just realized that my camera is frozen, but I think you guys can still hear me, so I'm just gonna continue. Yeah, but if there are any other technical issues, let me know as well. Okay, but I think, yeah, seems like you guys can still hear me. So, recently crossed above the moving averages, so that's also supporting our analysis. Now let's look at our RSI. Okay, RSI is giving us a bit of a bullish um, divergence here. Okay, so where I've highlighted, you can see that um, both of these on our price chart, it's in line with our first support, but on our RSI, it's making a higher low. Okay, and then prices proceeded to push upwards. So we're expecting that same thing to happen here. Okay. Any questions on this before we move on? No? Okay, let's pull out gold because I saw a request for that in the chat. So on our weekly time frame, you can see prices generally moving upwards. Daily on our daily time frame, it's giving us a bit of a reversal here. Okay, at this resistance here. And now looking at our 4-hour time frame, okay, I'm gonna place a first resistance here. Actually, followed by my first support over here. So my first resistance will go here, and then second resistance up there. So I'm expecting prices to continue pushing downwards towards our first support. Okay, but let's first see what our indicators and our Fibonacci levels say. Okay, 100% lines up nicely, 61 as well, so I'll keep those two. We also have a Nike tick here. The 138 lines up nicely, so I'm gonna keep that. Also going in over here, 100% lines up nicely with the second resistance. No. Okay, and then I'm just gonna take a simple retracement over here. Okay, my 61.8 and the 38 both line up. Okay, so you can see that at our first resistance, we have a little bit of um, confluence area here. Okay, so we might see a little bit of a rebound. Okay, let's see what our indicators tell us. Okay, prices are moving above the clouds still. MACD, however, is giving us a bearish signal, which aligns with our analysis. Let's take a look at EMA, SMA, Bollinger Bands. Bollinger Bands are not telling us much here. EMA, SMA, you can see prices crossing below both of the indicators as well. So that also supports our analysis. Next is RSI. Let's take a look. So RSI is not telling us much here. Let's maybe look at stochastic. Okay, stochastic. Here we have a hidden resistance. Okay, you can see at each of these high, I guess, yeah, each of these points where your indicator touched the hidden resistance, prices started to fall. Okay, and you can see that currently happening as well. Okay, any questions on this? So just to reiterate again, we're expecting prices to continue to fall towards our first support. But just be careful at this confluence area, we might see a bit of a bounce because of that confluence area that I've highlighted here. Okay, any questions? No? Okay, then we can move on. I'm gonna look at euro dollar now. Okay, so on our euro dollar, looking at our weekly time frame, prices generally moving upwards, daily moving upwards as well. Although there's been a slight reversal. Okay, so now looking at our 4-hour time frame. Okay, yeah, let's analyze this on the 4-hour time frame. So I'll place my first resistance up here. First support here. And a second support, maybe just about here. Okay, my 23 lines up, 50% lines up. Okay, let's see if we have a Nike tick. Here, nope, because price is already broken out of that level. Okay, now projection. My 61.8 lines up with the first resistance. And then let's see if we have a projection here. No, price has broken out of that level as well. Okay, so that's all the Fibonacci levels we have. Okay, let's pull out our indicators. Okay, MACD is giving us a bearish signal. Ichimoku, however, is giving us a bullish signal, which doesn't match our analysis. Let's look at EMA, SMA, RSI. Okay, RSI, I think, is giving us, is moving in this ascending trend line. Wait a second. Okay, no, this is not a valid trend line here. Okay. So I'm gonna remove RSI. Let's maybe EMA and SMA, you can see it's kind of transitioning now. Right, so I wouldn't go in for a buy or a sell until we have a clear signal here. Because you can see it's currently transitioning. It's not giving us any signal here. Okay, but yeah. So I would wait for price to move out of this transitioning period where it's kind of moving sideways. But I think also since the overall trend is pretty bullish, two of our indicators that we've used have been giving us bullish signals, the Ichimoku and the RSI. So you can go in for a buy towards our first resistance if you want. Is this a trend line? Okay, no. So for valid trend line, you need at least 3 touches, and this was only 2. But yeah, overall direction is pretty bullish. So if you don't want to wait for there to be a clear direction, then yeah, probably towards the first resistance. Okay, any questions? No. Okay. I just have one last request, which is Bitcoin, and this will be our last chart for today. Okay, so on our weekly time frame, you can see it's generally moving in an uptrend. Daily is kind of fluctuating or moving sideways a little bit. Let's look at 4 hour. Okay, 4 hour starts to look a bit more bearish. So my first resistance is here. First support maybe here. and then my second support here. Okay, going in with our Fibonacci levels again. 78.6 lines up nicely with our first resistance. I'll take a retracement over here. 50% lines up. And I'll just have one more retracement here. Okay, my 78.6. So it doesn't have to line up exactly. You can see here there's a little bit of gap between our second support and the 78.6, but I'm still keeping it because with Fibonacci, we are looking for confluence areas more so than specific levels. Yeah, so this is fine. Okay, let's pull out some indicators. Price is moving within the cloud, which means that prices are currently transitioning. Yeah, so I can't use Ichimoku here. Looking at MACD, it's giving us a bullish signal. Now let's look at EMA, SMA, RSI, and stochastic. Price has started to, yeah, it's very recently crossed below the EMA and SMA. I don't know if you can see here. I'll just zoom in. Okay, it's recently crossed below the EMA and SMA, which is giving us a bearish signal. RSI is giving us a bit more of a bearish signal as well, along with the stochastic, because there is a, oops, actually, no. Here you can see this descending trend line here. Okay, it's not very obvious, so if you use this this, I guess, cross here, you can see that it's slightly moving downwards. Okay, and yeah, so you can wait for price to move out of its transitioning period, like we saw in Ichimoku, or most of our indicators are giving us a pretty bearish signal. Okay, so I would say if you have to, or if you want, you can go for sell towards the second support. Also, because I don't see any big confluence areas at our first support, we only have this 50% retracement. So, yeah. Or if you want to be extra safe, you can wait for price to break below this first support and the 50% before going in for a sell. That works as well. That's just extra, I guess extra safety or extra confirmation here. Okay, any last minute questions? I think, yeah, I've done all the requests in the chat as well. So if there are no other questions, that's all I have for you guys for today. Oh, my camera is still frozen. But thank you guys so much for joining me today. I hope you guys found the session helpful. Have a great rest of your week, and I'll see you guys again soon. Thanks, everyone. Bye.